All right, so now we're going to be identifying highs and lows on the charts. So before I get started, I'll give you guys a second to identify the highs and the lows, the most obvious points. All right, so pretty straightforward. This is the last low. In other words, an old low on the higher time frame. It will look like this, right? What's resting just below that low? So stops, right? There is so stops resting just below that low. They got taken, right? In other words, liquidity. What's resting just above this high? Buy stops, right? Because that's where the move went down, price pushed up, then price pushed down. That's the last high. Take the high out, then made a retracement. There's buy stops resting just above that high. Was resting just above this high. Buy stops resting just above this high. Got taken. You triggered people's stop losses or buy stops, right? There's a big liquidity pool here. They got taken, and then price made a move in the opposite direction. It's just simply manipulation. That's all it's doing. Right? It's going for every high, for every low there is in the market. And because the market is fractal, right? It's going for every single low and high that you see, even on a smaller time frame. Notice, took out the high, reverse. Took out the low, reverse. That's what the market does day in and day out, right? So this is what I mean by liquidity above every high and below every low. In other words, liquidity on structure points, right? So that's it for now. On to the next one.